We took a very solid SPY puts trade yesterday, May 18th, following our pre-market plan perfectly. I want to break down basically this trade from the inside out as the market sold off over 200 points to the downside. I'm going to explain market context, which gave me more conviction, along why I took this trade to the downside, why I was expecting such a large move, and where I entered and where I exited. I'm also going to explain a bunch of psychology tips because there was a lot of lessons to learn from this type of action that we could use and better prepare ourselves for trades that we may take in the future. And if you're new to the channel, welcome. Definitely hit the subscribe button. But first thing I want to get into is the pre-market plan. I post these every single day in my Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios. So this is on the S&P 500. You all know it's my favorite instrument to trade. I always chart the /ES, the E-mini future. And I said it's setting up for a bigger move, in my opinion, up or down, play levels, and have no bias. A lot of traders go into the market every day with a bias. They expect the market to go up. They expect it to go down. And the reality is the market doesn't care about your feelings. So in my opinion, the best way to trade is to come up with your levels of interest. For me, it's my supply and demand zones, and then see how, what, and why price reacts the way it does at that level of interest. So scenario number one was just looking back in the pre-market. We had demand at 4046, which is this top green line up here, to 4030. I wanted this level to hold and bounce to potentially play long, targeting the supply above. When the market opened, we never got that. And then scenario number two was what played out perfectly, was if I said, if we failed to hold this demand, we have another demand zone at 4023, but it's not a key zone. If selling pressure is heavy with weak market leading equities, I will be open to playing puts in this range as there's nothing to support price until 4,000, whole number, and then the key demand at 3981. So those essentially are my levels of interest. The market opened up. I'm going to zoom in a little bit here. I'm actually going to go to a 1 minute chart. The market opened up and we had basically no reaction to this 4046 demand zone. Did not find any signs of buyers. And at this point, I completely removed this zone and I'm not really interested in trading this at all. And in the intraday commentary tab, I said I'm not interested in taking this long at demand. We're moved far into the zone without showing signs of bouncing. Now, where market context is very important is if you were to look at the past couple of weeks, pretty much from the start of April to about now, we've been seeing moves to the upside being very short-lived, meaning every time we move up, it fails. Every time we move up, we fail. Then we start selling back off, bounce off demand, create new demand, and then this rally over here, if I put a chart with volume on it, was done with very light volume to the upside, which does not make a rally very significant. You add on top of rallies have been failing just in general, made this area of 3 days right here very weak to the downside. That's why I said I'm expecting a very big move soon in the pre-market plan. On my Instagram, I actually made a post about this. I'll post a link in the description below at InvestiTrade. I definitely recommend following it. But essentially I said, every single rally in the market has been getting sold into. We've been seeing many rallies fail. Every time buyers step in, the market moves higher, but it's being met with selling. The rallies fail, and then we eventually start moving back down lower. These provide nice bearish setups, especially with demand zones not providing much follow through as buyers are failing to prove strength for a trend. Understand that because that is very, very key in this video. So we had this very weak volume rally to the upside, basically on the start of this May 15th week, May 16th week. And then we had the open where we had our levels of interest at 4030 and then this 4023 demand zone. So the market opened up and we really did not see a clean reaction at all. And we began to sell off below 4030. A piece of advice I want to give you is the more pieces you could add to the puzzle and the more pieces that you could use context clues to understand the picture that the market's trying to tell us or the story is trying to portray to us, the more clues that we could build into the story, the better trades we're going to take and the higher quality setups we're going to see. So at all times, even if I'm trading the S&P 500, I have a NASDAQ up because I want to gauge weakness in NASDAQ as well. And I also have a chart with Apple, Amazon, Facebook, Google, Microsoft, Tesla, basically some of the major market leading equities that if I am trading a bearish setup, I want to see these names exhibit some type of weakness as well to not only support a weak NASDAQ, but also a weak S&P 500. So when all the things align, that's when we get high quality setups. So in the pre-market plan with NASDAQ, this is where I'm just trying to put all the pieces to the puzzle together for you all to understand where my head was at when I took this setup. So essentially NASDAQ, we wanted a 1-2-300 break with weak market sentiment, and we could see us selling off and trading to the demand zone below. This was also inside of this 1-2-3-2-9 demand zone, which was responsible for a very large bounce the day prior. So this demand zone the day prior, sold off into it and rallied. I think we took this long the day prior to that. And then following day, the day we took the market short, we came into the zone and we did not find the same amount of buyers that we did the day prior. We're starting to see a different type of reaction out here. So when we see a different reaction, we're going to get a different result. We had that 1-2-300 level that we wanted to short below. And eventually we got below it and sold off to the next demand zone. But at the same time, I was watching this, and the setup that I took, reviewing it now, really wasn't a high quality one, although it worked out perfectly. NASDAQ still did not get below this demand zone, and the S&P was selling off below 4030, and we were not finding buyers at this 4020 demand zone. Now in the pre-market plan, in the intraday commentary tab, this is where I update my thought process throughout the day of what I'm seeing form in real time. I said if NASDAQ could give up this demand, I'm expecting more selling. This could also help support an ES break in validating this 4023 demand zone to target 4,000 and then to target the 3981 demand zone. Weak market equities, mute this. Equities are still extremely weak. And at 9:49, I said as long as we can remain below 4030 here in the next 10 minutes, I do think lower prices will be revisited. Now, why I said this was if you were watching the time and sales and the level 2, very big component to my trades, you would have noticed very aggressive selling below our short below mark at 4030, specifically 4025. However, we were at this demand zone, so I wasn't open to playing short immediately when we tested demand because we could have had the possibility of rallying off of this. At the same time, NASDAQ could have bounced off this demand zone as well. So I think if you got in prior to this demand zone being tested, it was a very low quality setup because we had the probability of us bouncing off of this demand zone. However, it wasn't until 9:49 Eastern that I played SPY puts. I played the 400 puts. I'll show you my fills after this. I posted them in the Discord. I played it when the market looked just like this. Now I'm going to pull up Bookmap here so you could see what I saw on the tape, because this is the only way I could show you historical data. Here is that very large seller, over 1,300 lots at 4025. And then here we had our 4030 level that once we got below with aggressive selling pressure, I wanted price to stay below it because once we break below support, we want it to act as resistance if it is tested to the upside. So then we came up, we failed at 4030, and at 9:49 I played SPY puts at 4025, risking 4030. So essentially I was risking about 5 points in this case. My stop was a little bit above 4030 to make my target at 4,000. So from a risk to reward standpoint, it was about a 25-point risk, or excuse me, a 25-point reward for about a 5-point risk. That is a 5-to-1 risk to reward. Even if it's a lower quality of a setup, I will take that all day long because my risk is extremely, extremely tight. So I was cool with the risk. The market came down to the low. And if you are watching price action in real time, it was not very clean. What I mean by this, let me pull up intraday commentary tab here. I said where 4030 came from was we're trying to bounce out of this demand, but we're just not finding buyers. Essentially, we come into a demand zone like this, you want to see the market react immediately. You don't want us to see it, hang out, make lower lows, make lower highs inside. you want to see aggression to the upside, and you want to see bid step in, which we really did not see. And I wanted to see us close below 4030 very, very soon. Now, at this point, if you're watching price action develop in real time, you could kind of see it after the fact. However, it wasn't clean price action, meaning every time we broke the low, we kind of just hung out and stalled out here. Now, pulling up bookmap right here, we had another very important key level at 4012. This is another very important lesson about volume. When we came down into 4012, just like this, I'm going to show you what it looked like on Thinkorswim. It looked just like this right here. 4012 is right here. Sold off into it. My position's doing very well. My stop is 4030. I got no reason to panic. The market does come up. But on bookmap, we had very large volume at the lows. As you can see right here, I have a volume profile up. And this isn't a really telltale sign of a possible reversal. Ideally, you want to see a bunch of trapped buyers at the low. Excuse me, a bunch of trapped sellers at the low. And you want to see a lack of liquidity. When I see a bunch of volume at the low, that really means that lower prices most likely are going to be tested. So the market pulled up and we rallied to about 4025. Now, what this looked like on the chart was this. And if I was a beginner trader and I did not implement proper risk management and I had my emotions doing the trading, I most likely would have stopped out of this trade right here. So the psychology lesson with this is you must either exit if A, your stop loss triggers, or B, your target triggers. Everything else in between, these intraday price fluctuations are just going to scare you, and it's going to make your mind and your ego try to protect you from not losing on a trade or from not winning on a trade. So you're going to see yourself, at this point maybe up, let's just say $1,000, but we rally and now you're only up maybe $100, and your mind subconsciously is going to freak out. Your target never, or your stop loss never hit, but because you subconsciously see that you're close to about break even, you're going to exit the trade prematurely because you're letting your emotions do the trading. Eventually, the market came back down, and look where we bounced at, right at 4012. Pulling up bookmap here, what are we doing now? Now we're building even more volume at 4012 to about 4015. And the intraday commentary tab, I said there's some heavy volume here at the low. It usually means more selling. This does not really represent a sign of a potential bottom or a reversal. There is tons of liquidity at the low, and highs and lows usually form when there is a lack of liquidity or illiquidity. Think of every single market. The market moves down till the last seller sells, and the market moves up until the last buyer buys. In this case, at the low, we had a bunch of liquidity, which I said we're trying to bounce right here. However, if anyone is in short, you want 4012 to break and for us to keep attracting more sellers below this. I do expect 412 to be broken at some point today, whether it be sooner or later. And then a few minutes after I sent that update, we cracked 4012. Now, here's 412. Look at the aggressive selling volume below 4012. Got below 408, and the selling just kept going. Eventually, once we're below that level, again, you want it to act as resistance. 4012 acted as resistance, and the selling kept continuing. And this setup was working out perfectly. Continued to sell off. And like I said earlier, the sell-offs were increasing with volume, but the follow-through was not really meeting up with that momentum. Now, at this point, I had full confidence that the sell-off was going to continue because the NASDAQ also broke below its key level and was heading towards that nearest demand zone to the downside below it. So I had full confidence and full conviction that this move was going to continue selling off the target. And I got out about 3 points before target, about 75% of my position, had a couple runners to target this 3981 demand zone, which was from the pre-market plan again. Came back up, 4012 acted as resistance, moved sideways, and then eventually broke 4,000 with heavy selling pressure. I'm going to pull up what the tape looked like here. Watch when we break 4,000. We had a bid step in, and then boom, same thing. Aggressive heavy selling pressure to the downside, continuation, And then we got to our 3981 demand zone, and I got out the remaining 29 or 25% of my position. And in the intraday commentary tab, I was basically whatever was coming through my head, I was typing it as soon as I could in the intraday commentary tab. And I said if we could break 4,000 and attract more selling, then most likely that 3981 demand zone will trade. And this analogy I posted is a good tip to understand that before this 4,000 did break, look at every time we broke the low. We broke the low and we consolidated. Broke the low and consolidated. Volume was increasing by price as we did break the low, but we weren't seeing so much follow through. And that's something that you want to see. It's like taking the steps down. We're moving down. We're hanging out. We're moving down. We're hanging out. Instead, you want to take the elevator that when we did break 4,000, look at the difference type of sell-off. Volume was there, and we had a straight move down to this 3981 demand zone, and that was a clean setup. Now, another thing I want to explain is the problem with this setup. I was even telling members to be extremely careful with playing into the long side. We're not finding any signs of buyers, and the action is the same at this demand zone as it was the two zones above. And a psychology tip that I want you all to understand here is this is where emotions and us as traders, we're our worst enemies. So going to a 5-minute chart here, zooming in intraday, there was an obvious sell-off all day, lower lows, lower highs, right? Every time we hit demand, we did not find buyers. However, if you missed a setup or you didn't take the market short, or even if you took a loss, everyone who did not participate in the trade is going to see others doing it. They're going to see the market moving, and they're going to feel like they missed out because they wanted to make money and they want to take good trades like others are doing. That's the wrong mindset. Do not have FOMO. If you don't see a setup, you don't take it. How many days a month do you see an all-day sell-off like this, selling off, 200 something plus points, or rallying 200 plus points? You don't see it too often. And the ones that miss a move like this always try to figure out how they can take it. And the best advice I could give is if you don't see your setup, then you don't have to trade it. And just because you see the market moving does not mean you have to trade it. Just because it's going down or up and it's not presenting a setup means you have to sit on your hands and wait for your setups to trigger. I don't trade the market to make money. I trade the market to trade my setups, as I know with my setups, they're going to make me money. This is key, and in my opinion, a lot have it backwards. So we see this sell-off, right? And yeah, it sucks. I got in the contracts, let me pull it up here, at $1.33, and I sold my last fill at $3.25. That was like 150% gain on the contracts, right? Great gain. Nothing wrong with that at all. For a small amount of money invested, 150% return in a less than 2-hour period is fantastic. However, I'm not sitting here where I sold the put, or I got the puts up here and I sold at this demand zone, right? This is where I made my 150%. But I'm not sitting here and complaining that, yeah, the market sold off another 70 points and my contracts that I got in at $1.30 by end of day, they went to $10. And instead of making 150%, I could have made 1,000% return on these contracts. If you think like that, you are going to destroy yourself subconsciously, and your account is just going to hurt the next few trades that you take. I can't tell you how many messages I got after the market closed this day saying a lot of people had FOMO because they saw their contracts. They could have made an extra $2,000 on their position if they held. The question is did you follow your plan? And for me, I entered where I had to. You could look back and say it wasn't the best entry. I maybe should have waited for the 4012 to break, maybe even the 4000 to break. Maybe I got in prematurely, but it worked out and I followed my plan and I exited right according to my target. What happens if I did not sell at my target, right? Let's just say I didn't sell down here and the market just reversed 100 points. I would be so pissed off at myself that I didn't follow my plan and exit where I told myself I would because I wanted to make more money. And then the market starts reversing and me being up 150%, now I'm only up 10%. And I lost out on so much profit because I wanted to make more money. If you follow your plan as a trader, that is the only thing you could do. No one knows what's going to happen in the future. No one knows where the market's going to head next. However, if you follow your plan, exit and enter where you have to, and then focus on another setup. You could argue that maybe I should have looked to re-enter maybe when we broke below the next demand zone, or maybe when the rally failed up here. Because on this stair step to the downside, all these rallies, look at this, failed, right? Look at this, failed. This rally right here, failed. Every single move up, failed. So when you recognize this type of context intraday, maybe instead of complaining that you should be holding your position, maybe look at ways that you could re-enter for a new position that might yield a better return than the first one that you took. So don't have FOMO on these days, because a lot of people see this and then the next day happens, right? And we're completely balanced out the next day, bounced perfectly off this demand zone, perfectly. And a lot of people are going to have FOMO. They're going to see the market come up. They're going to take it long. They see it coming down. They're going to take it short. They're going to expect the same action that we had yesterday. And because they weren't active in that move to the downside the day prior, they're going to try to make it up the next day. And they're just going to blow up their accounts because they have FOMO and their emotions are their worst enemy. So I don't want this to be a rant. I could go on forever. But I hope this video was a lot of in-depth information. Very simple setup. Looking back, might not have been the best entry, but it worked out. Respected my risk, and I followed my plan, and that's the only thing I could do. I would appreciate a thumbs up, comment if you have any questions, and definitely check out the links in the description below. I offer a very in-depth and educational course. Comes with access to the Discord at no extra charge. But peace out.